Good morning. It's another beautiful day, August 18th. I'm Robin Ware. This is Robert L. Peters, and we'll see you in just a moment. Good morning, everybody. Guess what? You're $6 billion poorer today from your taxes going to Iran. No big deal, though. Just nothing to see here. Nothing to see at all. Donald Trump gets indicted again. Nothing more to see here. And I don't know if you know this or not, but they just kicked the charges out on Hunter's taxes.
All right. Hey, everyone.
Good morning, Mark.
So, looks like China's starting to blow up.
Yeah.
But we saw this coming. This shouldn't surprise anyone. Let's see what's happened here. This China Evergrande
Yes.
collapse. Wow. Yeah, this is what I've been saying, man. My brother is an investment banker, and he knows bankers that work in China, and they were saying how it's just a big bubble over there, and bubbles can go a long way down. EGRNF. Oh, let's see that. I didn't even know that it was traded here.
Hey, there's that Country Garden company also that Steve was talking about.
EGRNF. Well, I guess. Yeah. Wow. Look at that. Oh my gosh.
Yeah, that's how it melts. I wish we had known that. We'd have been able to watch that the whole time.
Well, yeah, it hardly trades though.
Yeah.
Yeah, I mean, it's kind of a big deal. And the trouble with China is they're very, you don't really know what's going on over there. So you got this Country Garden, you got Evergrande Group. So let's see, how could we, let's look at FXI. That is a China ETF.
There's yin and yang also. I think yin would be your bearish China.
Yeah, that's leveraged. Let's see here. Well, I'm not really seeing too much over here. Yeah. Well, I don't know. I guess it's not a surprise. I don't think anyone is surprised. But what's going to happen though is also too. What else is so this is really bearish for the market, obviously, and then we got our 10-year interest rates continue to move higher, so 4.3. But this is actually, let's see here. This is right where they were back here. So maybe we get a little bit of a sell-off in interest rates, which might be a short-term boost for the market. Yeah. But I don't think it's going to last long. Let's see here. So the problem with this is that what happens is if houses become less affordable, more people are going to move into situations where they rent, and that's going to drive rents higher. And that is a direct component of inflation. It's one of the biggest ones in the CPI. So don't believe the myth that this inflation thing is over. I don't think it's even close to be over.
Oh, no. No, people can't afford a home now, Mark. You look at the prices in just in this place that I just moved to, the prices are elevated $200,000 from 3 years ago.
Really? Yeah.
That's a lot of money.
Well, I guess that's good if you own the house.
Well, right, but then you have to replace it, and now you're going from a 3% mortgage to an 8% mortgage. It's unfathomable.
Yeah, it's well, I don't know, man. Hello, Mr. Steven. Hello, AV. All right. Anyway, so the market's pretty much acting as we thought it would, and it's like if you just watch all these different parts and these different components, it becomes pretty easy to read after a while, after you get some experience. People say to me like, "Oh, you seem to have such a good market call," and it's like I really don't. I just watch the market itself and let it tell me what to do. So here's our small cap stocks. This is a Russell 2000 ETF. So this is getting pummeled. Yeah. So
Apple fell out of the bed last night. It's down $1.50 this morning.
Yeah, I mean, this to me looks like, you get it when you get these big moves lower, and then you don't get any kind of a rebound on the or whatever. It just looks like it can keep going to me. And I don't know, maybe look for a bottom around here, but that's pretty far a ways down. So if we look at S&P, right, let's go start there and go through these sectors here. We're at 434. I think we're going to get some kind of a bounce if we get to 431. Now, we had support there. So just think about this. What would you do if you had sold there? A lot of people would say, oh, the price went higher. I sold. I made a mistake. I'm going to buy my shares back, but I'm only going to do so if I get them the same price I sold them at. And then you're going to have these investors who want to buy are going to start cutting in front of each other because they're going to get afraid that they're going to miss out. So I think we get a bounce there, but I think the market's going to go lower. And I mean, the way things are shaping up, it looks like we could be on the cusp of a pretty big sell. I mean, we have been on the cusp of a big sell-off. Well, we're not on the cusp. We've had a sell-off.
You filled the box, huh, Steve?
Filled the box. What's that?
Means he filled his cooler with fish.
Interesting.
All of Steve's stock trading analogies are fishing euphemisms.
Look at Tesla. Look where it's trading. It's trading right down to within a few points of this important level here.
But I mean, there's some logic to it. I mean, I know exactly what he's talking about when we talk about it.
Yeah, it applies to like everything. You could analogize it to pretty much anything.
Yep.
There's this pond over here where people go to fish, and I've been living here for 12 years, and I've never seen anyone catch anything other than a buzz. And it's like I think what happens, I think the otters come in and they just wipe everything out. They just clean out all the fish, and then they just move on to the next pond.
Yep.
So
otters are notorious for that.
Yeah, they're cute, man, but they're supposed to be really nasty.
Oh, listen, I had a hunting spot one time, and this otter found me, and he would lay in the creek below my hunting stand, and he'd just sit there and click his rocks. He wouldn't eat. He was supposed to be, eating shells, but this dude's just in the river, clicking his rocks, and nobody would ever come. I mean, it was ridiculous. I hated that otter. I should have shot him.
What do you mean clicking his rocks? What's that mean?
He would just lay on his belly, and he'd make all kinds of noise, so nothing would come around me.
Really?
Yeah.
So he was a jackass.
Oh yeah. And listen, man, you spend enough time around animals; they all have personalities, and they all have different little quirky ways about them.
Yeah, no doubt.
And otters are no different than a squirrel. I watch a squirrel every day just terrorize my dogs just by wiggling his tail as he runs across the line.
Yeah, my grandmother used to feed the squirrel, and one day she wasn't home, and it got mad, and it just got into her house. And it ended up getting stuck in the window. But yeah, well, I know for my guinea pigs, man, they're all very different, and my dogs too. Like Clifford is really funny. Like, I think animals like dogs have a self-awareness, because if I go and give one of my daughters a hug in front of Clifford, like, it doesn't bother him. But if I bring up one of my guinea pigs, he like starts to get really jealous, and he goes and he looks around for something to take, and he'll like say he'll find my hat. He'll take my hat, and I'll just go sit on the floor and look up at me with with his paws on my hat. And if I go to look like I'm going to go get it, he's just like, "Rrr." And it's funny because he's been here for 7 years now, and he's still really insecure. But anyway, all right. So Tesla, looks like we can get a bounce here, but I do think that we're going to continue to go lower. I just think that markets don't go in straight lines. So we're down to here. This is a level that had been resistance before. So we can see it here, right? Here are market principles that we talk about. Support over here, support here, becomes resistance here. Now, excuse me. Now there's a good chance that resistance turns back into support. And you're going to have these investors who are watching this thing, and they're probably not chart watchers. I think the majority of people aren't. But somehow all this stuff, I've been thinking about this stuff for 30 years, and it still kind of blows my mind because I still can't really figure it out. Somehow all of these actions manifest themselves in these clear levels. And like the vast majority of investors don't look at charts. And if they do, they kind of don't know what they're doing. But I think A vast majority don't know what they're doing, but somehow it all just comes together to like manifest itself in these clear levels. So there's people who sold back here who are going to want to buy their shares back over here. Then these investors are going to that want to buy are going to see, oh, it's not going down anymore. Let me jump in there. I better raise the price I'm willing to pay, because if not, some of the sellers are going to go to someone else. So I think we were looking at a bounce there, but it's kind of hard to trade counter trends. If the whole market's going lower, it's kind of hard to pick positions that are going to go higher. I'm not saying it can't be done, but some of the great traders, like like Tom DeMark, for instance, says like you should never trade against the trend, right? Like with the market falling apart like it is, you should really only be looking for short ideas. But that's just his particular
Personal
attitude.
preference.
But it is hard to trade against the trend. So let's see here. So we got this big blow up here in China of their big Evergrande. Now S&P, we've been talking about this, and we're starting to come to some kind of we're starting to get pretty oversold. And today is a Friday, right? And a lot of traders, they don't want to carry the risk over the weekend.
Mm-hmm.
And if you think about it, the odds are much greater that a story comes out or some news comes out that makes things go down than news comes out that makes things go up. Like, think about this, right? What could possibly happen over the weekend that's going to make people come into the market and really start buying SPY, or buy anything for that matter? Maybe if a company gets some good news or whatever, but think about all the things that are bad that can happen. Another Chinese company could go under. There's just the odds are greater that a surprise is bad than good. All right, so that's our S&P, and we're going to go look at our tech sector here. Oh, by the way, this week's guest is going to be James Buchanan. And
Sweet.
Getting back on there because he was basically considered the worst president in the country's history. And I don't know, he might get a little bit of a raw deal there because they kind of say that he didn't stop the Civil War, but it's like, I don't know if anyone could have stopped the Civil War. And when Lincoln came in, I mean, the South rebelled against Lincoln because, so you could almost say Lincoln started the Civil War, but that's a historical debate. And these historians, they like to rate people like this guy was the best president, this guy was the worst president. As far as I'm concerned, the best president was George Washington, and there's never going to be anyone as good as him because he's basically the guy who is the founder of the country, right? He could have been a king, and he said, no, we got to have a democracy. And he said, no, the military needs to be under civilian control. So these were at the time very profound things. I mean, he could have been made a king, and he gets kind of dissed. I'll tell you the reason why he gets kind of dissed. Because if Washington was alive today, he would be a Republican, right? And most academics are Democrats. So they there's this narrative like, oh, Washington, maybe he was a great leader of men, but he wasn't that smart. And that's just not true. I mean, if you read his writings, the dude was friggin' brilliant. And he kept the Revolutionary War together. Now, Thomas Jefferson, because he's considered the father of the Democratic Party, all the Democrats like, oh, he's so great, he's so great. But Jefferson was pretty much wrong about everything. He was wrong about the future of the country. He thought the country was going to be agrarian. He said it would take 500 years to go spread from the East Coast to the West Coast. He didn't believe in the banking system. He didn't understand banking. He didn't free his slaves like Washington did. And, we did our thing on Sally Hemings where Jefferson, after his wife passed away, started having an affair with Sally Hemings. Most people don't know this, but Sally Hemings was actually Jefferson's wife's half-sister because Sally Hemings was a slave that he inherited that was his wife's slave that came from his wife's father and one of his slaves. So it's kind of this twisted thing. But back then, think about it. The plantation was like this city in the middle of nowhere. So there was a lot of that going on with the masters and their concubines and so forth and so on. But as we got into the late 1790s, the the British and the French were, I'm pretty sure they were at war, and they started seizing American ships and they started impressing the sailors. Basically, they would come on an American ship and be like, hey, man, you guys deserted from the British would come on and be like, hey, you guys deserted from the British Navy. So we're going to take you and make you come work over here for us. So what was Jefferson's response? He passed the Embargo Act. And the Embargo Act was like, all right, well, we're just not going to trade with any other countries. So he banned trading with other countries. He thought we could kind of subsist on our own. And, it threw the country into economic chaos and it caused the War of 1812. So he just has this complete misunderstanding of things. And I think that the reason why he is considered so great, I mean, yeah, I know he did the Declaration of Independence, but a lot of that was kind of taken from other places. But because Virginia was the biggest state back then, they were like the most powerful. But yeah, so I don't know. I mean, I'm whatever. And he ended up going bankrupt, and he just I personally think he's overrated. I mean, it's just all, and history shows me to be right. As a matter of fact, that's kind of where the name stock jobber came from, because stock jobber was a legitimate name in England. They were the traders on the exchanges. But my inspiration for it, if you can call it that, to call ourselves the stock market jobber, is that when the country was founded, you had this battle going on between the Hamiltonians and the Jeffersonians. And the Jeffersonians, they were actually, back then that was called the Republican Party, and it shifted to the Democrat Party. And the Hamiltonians were called the Federalists. So Hamilton was this visionary, and when the Revolutionary War was over, there was this huge market for bonds, right? All the different states had different bonds, and most of them were trading at depressed levels. And Hamilton's idea was what we call the assumption. He had the federal government assume all of the debts, and that's what created the federal government. That's why they call the federal deficit Hamilton's blessing. And a lot of the Jeffersonians had issues with it because Hamilton decided to honor all these bonds at full price, whereas you had some soldiers who sold their bonds at maybe a tenth of the value, or tenths of face value, or 25% of face value. But Hamilton made the decision we have to honor these bonds because we have to have the country have strong credit. So a lot of those bonds had been bought in by investors. So the thought was, well, this is the guy that actually went out and served in the army. He should be able to get all the money. But Hamilton said, no, that's not right. We have to, as a country, we have to honor these debts so we can build up a credit amongst foreign nations. And the Jeffersonians didn't like that because they didn't really understand how banking worked. I mean, if you were some farmer back in the 1700s in rural Virginia or whatever, they didn't understand the whole concept of banking. And they didn't understand this concept of what we would call, I guess, the multiplier. Whereas, all right, well, the bank has, $1,000 in gold, but we can lend out $5,000 in notes because not everyone's going to come try to withdraw their gold at the same time. So this was at the time very controversial, but it was actually very brilliant by Hamilton. And there's been, since the country was founded, there's this debate has been going on, and it's very similar to today with the way we just print money to buy things. There was what they used to call the hard money people and the soft money people, and the soft money people were okay with this concept of like, all right, well, the bank doesn't need to back all of the notes that are out there with gold, whereas the hard money people did. So this has been like this narrative that's been going through our country's history. And as a matter of fact, in the late 1900s, probably the biggest issue that was going on was called bimetallism. And there was the farmers out in the Midwest had really depressed crop prices. And they kind of understood, all right, well, if they print more money, if they issue greenbacks and notes, that's inflationary. And that's going to drive up the prices of their crops. So that's been a big thing that's been going on. It was since the beginning of the country. So it just shows you how history. It may not repeat, but it certainly rhymes. Like I think it was Ben Franklin. Was it Ben Franklin who said that? I don't know. One of these guys. So anyway, this whole thing has been going on. So that was like their form of quantitative easing. And if you look at money up through probably the 18 or 1920s, it says, this is a gold certificate. And you could go into any bank and you could be like, all right, here's my $20 gold certificate. Give me $20 worth of gold.
Yep.
Now, if you look at a dollar, it says it's a note and it's just backed by the promise of the government. But regardless, this whole quantitative easing debate has been going on since, for 250 years now. But that's my take. And that's why I have a picture of Hamilton in my office and I don't have a picture of Jefferson. All right. Hello, Kyle.
Very nice. Very nice. Very nice.
Yeah, well, it's like history repeats itself. And this is why, if we look at the charts, we see the same patterns going back since charts can go back. Because what we're looking at when we look at a chart is investor psychology. And the names have changed, the people have changed, the companies have changed. But what hasn't changed is the human psychology, right? People back then felt seller's remorse. People back then felt buyer's remorse. So here's the Dow Jones. I think this is kind of an interesting chart here. I wish it went back farther, but the Dow Jones was founded by Charles Dow when he started the Wall Street Journal. But it would be really fascinating to see charts of like the Civil War and so forth. But anyway, if we go back to here, right, this is the Dow Jones going back to the 1890s when it started. And look what we got here. We could be looking at a chart from today. We have resistance here, became resistance again. So why does resistance become resistance? Well, there are people who bought here in February of 1906 who are like, man, this is where the market collapsed. This is the panic of 07, which JP Morgan came in and bailed the country out because there was no Federal Reserve back then. But then we get back up there and somehow miraculously or amazingly, I don't like to use the word miraculous, but amazingly, look at that. We found resistance at the same point. You got people who bought back here who regret doing so, and they tell themselves, I want to get out. Now, this is 1909. We go forward to January of 18, right? And what happens? The level that was resistance becomes support. Down here, you have support becomes support. And what happens? We get to resistance and we sell off. We get to support and we bounce. Just like now, back then, you had investors who wanted to sell, and they're like, there's other sellers coming into the market. The price isn't going any higher. So I better go out there and reduce the price I'm willing to sell at. And you get this snowball effect, and you get down to support, and it's the same thing. People want to buy, and they see the price stops going lower. And then they say, well, I better be willing to pay the highest price in town, or else the sellers are going to go to whoever is. So I'm going to raise the price that I'm willing to pay. So just like now, you get resistance at former peaks, and you get resistance converts into support. Resistance converts into support. I mean, look at that, right? You don't need to be a chart guru to see that. And right back here. So here we have September of 1897. The Dow Jones was at $30 or $40 or 40. Became support again in 1900. So important to understand when we look at these charts, we're looking at market psychology, and investors, people have not changed, right? I mean, there's obviously no one who traded back then is still alive. And I think probably the only company that still exists is from the Dow Jones back then is maybe General Electric.
So you can say GE.
Yeah. I mean, back then, I'm sure there were 30 companies, and I think GE is the only one that's left. But
That's
back
incredible.
then, it was probably railroads were big. And then, so it's just kind of important to understand. And I know I harp on it a lot, but I think that if you, people say to me like, oh, you're one of those chart guys, like you're like into astrology and so forth and so on. And it's unfortunate because a lot of people don't understand technical analysis and they don't respect it. But that's because a lot of the people that do it don't really know what they're doing. They don't, and I've known, believe me, I've known a lot of technicians over the years, and there's very few that I think really kind of get it. I mean, they look for the patterns. They might say, oh, this is this pattern or this is that pattern, but they don't really understand why the pattern formed. I mean, like if you don't understand that you can get resistance at a former peak because of buyer's remorse, you're just going to have a hard time understanding how this happens. You might say, oh, it's this pattern, or it's this pattern, or it's that pattern. But anyway, as we go through history here, we see that history repeats itself because humans have not changed. Now, if we were, well, look at that. So here's the, oh, I never even noticed this. So here's the Great Depression, or the crash of 29, which didn't end until 32. But look at that. It found a bottom at the same level that it did back in 1907.
That's insane.
Yeah, it's and it's wild too. Like, I mean, you got to wonder. Sorry, man. I've had this cough for like 2 or 3 days.
Yeah, you're good.
Yeah, I felt pretty lousy the last couple of days, but I feel better today. But I still got a cough. But anyway, I mean, how does this happen? Are a bunch of people looking at a chart saying, "Oh, we're at the same price that we were back at in February of 07. You know, we're at the same price we were at 25 years ago. Maybe we should go out there and buy." Well, I don't think so. I just think that like the mass ends up becoming like this life within itself. Like if you think about like an ant colony, right? Um, like individual ants probably don't know what they're doing, but somehow down in like the rainforest, when the rains are coming, the ants know how to like all hook together and turn themselves into like a floating island. You know, how does that happen? I mean, that is, I would say, is kind of miraculous.
Yeah, well, yeah. Probably the pheromones. I mean, I don't know, but it is wild. I'm sure they lose quite a few ants though in that whole endeavor.
Hey Ty, how are you? Look, man. Like I've said, I've been doing this for 25 years, and I still really don't get it. And it's hard to kind of fathom. But if you look at the chart, you know, there it is. The charts don't lie. You know, so somehow all these people come together, and it manifests itself at these clear levels on the charts. Again, this could be, you know, this could be a chart from now. And then if we move forward through history here we got our crash. Here we got the Great Depression. Now, the Great Depression was still going on, and Roosevelt's New Deal. Historians debate it today. I mean, there's certainly good things that come out of it. The main thing is like security, right? Social security, welfare, but it didn't really bring the economy out of recession or depression. What did was World War II, and this is right where World War II starts, because all these farmers that were unemployed, well, they went into the military. Well, that's a job. You get paid. There was all the war production. So this is what kind of saved the country. I mean, it's kind of ironic, and it's a weird thing to say, but it's like World War II saved the country from economic collapse. And as we move forward here, so here we have 1956 resistance, and then we move forward to 1962, and that's exactly where we found support. Now, were people watching the charts, or is it just this mass population kind of thing coming together? I think I'm not really sure. I think this might be the Cuban Missile Crisis is what drove the market down here. But regardless, somehow resistance back here amazingly turned into support over here. That's right where the bottom of the wick is. Here we get resistance here, became support over here. Here we have resistance, and this is the Dow Jones, and this is right at 1,000. So this is our psychological level, an example of a psychological level. So 1,000, 1,000, 1,000. And back then, they didn't have ETFs. I think they only had a few mutual funds, too. So it's not like, I mean, look at that. So 1,000 was from 1965 to 1981 was resistance on the Dow. So they didn't have ETFs. So it's not like people were selling the diamonds, right? Like people do now. But people just said, hey, if the Dow Jones gets to 1,000, that's where I'm going to start selling. And this resistance was intact for, 15 years here. Now, how could an academic explain this? They couldn't. How is it that the economy or the market, I guess, had the same exact valuation in December of 65 as it did in October of 80? I mean, it's just amazing. And then on the downside, there's the wicks down here. It's kind of hard to see, I guess. But so that's where the bottom was there. So in March of 1978, we found support right around 735. March of 1980, we found support right around 735. This is our market memory. And, and then we keep going into the future here. There's a little bit there, but we get back up here to the current times. Oh, Patrick Swayze's birthday today. One of the most awesomely bad movies ever is Roadhouse. They're doing a remake of Roadhouse,
Really?
Yeah, dude.
Who's going to be in it this time?
I have no idea, but Roadhouse is the world where the bouncer gets the doctor who's incredibly gorgeous. I think it's just a funny movie. It's so bad, right? It's like Patrick Swayze's working out, he's smoking while he's working out.
I watched that movie for the doctor, Doc.
Yeah, and then I like the bad guy who drives around in a monster truck. And then at the if you remember the last scene of the movie, there's they're at the bad guy's place, and he's I guess he was a big game hunter, and there's this room with all these hunting trophies, and there's this gunfight, and it's just this absolute bloodbath, and people are getting slaughtered, and there's blood splattering everywhere, and it's just this absolute bloodbath. And then the last couple lines of the movie is the big fat guy who's one of the bad guys comes out, and he's just what does he say? He's that wasn't a grizzly bear. I was oh, a polar bear fell on me, and everyone starts laughing. It's just so amazing, man. But anyway, all right. So here we have January of 15. This is the Dow Jones, and when we get the COVID crash, where do we stop? Right at the same level that was resistance before. Move forward to the future here, or to the present. So this is January of 20, right before the sell-off. And where does we find support in September of 22? At almost precisely the same level. So if you think about how many millions of investors there are and how much money is involved and so forth and so on, and it's how does all this stuff come together and manifest itself in these really precise and clear levels? And it's like I said, man, I've been thinking about this for a long time. Oh, wow. Happy birthday. Got stung by a bullet ant. That doesn't sound good.
I think it'd be more bit than those things bite. They got big pinchers.
Yeah. You guys got those fire ants down there?
Yeah, that's what we have is fire ants. Bull ants is what they call them.
You ever get bit by one?
Oh, yeah.
Does that, I guess,
once. It only happens once in your life. You don't get bit after that. You start looking for them when you're walking around near them. You kill them when you see them after you get bit.
Yeah, wow. All right, anyway, so moving forward here is now our short-term chart, and we can see some of these same principles coming into play. And all right, so I know we got some people that came in late here, but
and good morning, guys. I'm sorry we didn't say hi to everybody. Kyle,
yeah, my
Steve,
birthday
and
coming
Di,
up too, and I'm one of these people that doesn't like their birthday. So
Sean Savage and Avi. That's a great name, Sean, by the way. Sean Savage.
Yeah, that's cool. So, all right. So let's see here. So this is our S&P, and now I said, we're going to get I think we're going to get some kind of a bounce, and we're getting pretty close. But we got some pretty bad stuff going on out there. We got this. China looks like it's about to just completely collapse, and this shouldn't be anything new. Did you ever see the videos on what they call the ghost cities?
Yeah.
In China, they just built all these cities, and there's just no one to live there. So you got the city that could have a population of 1 million people, and there's 10,000 people live there. And then one of the famous videos, the reporters, they go into this mall. It's this huge mall, and there's just one store is open. There's room for 100 stores, and one store is open. And then the police come in, and they shut the video down and so forth. So we got that. We got interest rates are really starting to soar. Now, obviously, interest rates soaring is inflationary. And when you get these mortgage rates soaring, it makes people can't afford houses. So what do? Well, they go rent. And that drives up the price of rent. And rent is one of the biggest components of the CPI. Now look at this. Here's yet another example. So this is the 10-year yield, and you got to remember this is the inverse of the bond price. So if we wanted to see what the bond looked like, we would invert the scale, and we got to support, right? And then we got to support, and we got a little bit of a bounce. So it's not a coincidence that this is where we stalled out. You got to remember the interest rates are driven by the price of bonds. So, but anyway, so we got this, we got the Evergrande. All right, let's go look at a couple more of these sectors here. Yeah, we don't really have much stuff like that up around here in Connecticut. We got black widows, we got recluse spiders, but recluse spiders are reclusive, hence the name. My brother got bit by a black widow one time.
Yeah, they're bad. You know, that used to be an invasive species when I was a kid. Now it's native to us. It was like, you know, black widows were coming up from South Africa into Florida when we were kids. Now it's a native spider.
Yeah, we got them. We got them up here. I mean, not like a lot. You know, I think they kind of stay away from people. But all right. So anyway, here's healthcare. So this is getting close to where there could be some kind of a bounce here. So this is the 133 level, call it. So it was resistance, then it turned into support. Now we could kind of maybe get down here and get a bounce. So let's look at United Health, because that's a name we've been watching for a while, and it finally broke down. And this is our. I did something on this on our website last night.
Yeah.
So so this could be our potential of see right here, right? What was support converts into resistance. So a lot of times when you get these fast moves higher, when the market turns around and gets back into those levels going the other way, you get the fast move lower. And that's because one of the reasons why we have support is because you got remorseful sellers trying to buy their shares back, right? And when you have a move that goes really fast, you don't have enough time or a lot of time for there to be a lot of sellers or to build up like this concentration of vested interest that was going to create support on the way back down. So this is why people say gaps refill. And you can see this phenomena kind of a lot of places, right? Here we're in a zone. You still have the same emotions going on, but there's just a lot more, I guess, participation or activity or whatever you want to call it. So someone might sell, a trader might come into the market here with a big sell order or a big buy order. So let's say you come in here with a big sell order. This thing averages 2 million shares a day. So say I'm a trader at some big fund and I got an order to sell 1 million shares. Well, I could probably come in here and find some buyers. Now,
Right.
if we're down here and I come in right down here, it's like, well, wait a second. There aren't any buyers around. It's going to have a hard time finding buyers. So I'm going to be forced to offer my shares out at a discount, and that creates the move lower, creates the downtrend. So remember, fast move higher, fast move lower. We can see it here. Fast move higher, fast move lower. Here we have the opposite. Here we have fast move lower, fast move higher. Now, why does this happen? Well, one of the main reasons why we get resistance is because we have remorseful buyers trying to sell their shares to get out at break even. When you go really quickly through these levels and we reverse, there's just not a lot of, not a huge concentration of investors who went there to buy. So you gotta, I think too many people, and I can understand why. Look at that, like resistance, 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 resistance. How is this possible? And look at that. There's your fast move lower, fast move higher. For whatever reason, some price levels are more important than others. And sometimes we know why, sometimes we don't know why. But people look at the media, I don't know, CNBC or Bloomberg, or they go into these, online things. And the problem is the media tries to subscribe or prescribe. I don't know what the right word is. Subscribe every single little move to some kind of news story. And I think you could just take the news and throw it away and just watch the charts. I mean, right here, I would imagine that there was probably like some big news story here, like, oh, United Health is up because of this, or United Health is up because of that. Well, I would say, as a trader, I think United Health is up because it got to a former support level. Okay. And there are people who sold here who regret their decision to do so when the price goes higher. And they tell themselves, hey, I'm going to buy my shares back if I get them at the same price I sold them at. So we get down here and we get to the level that was support before. And all of a sudden, people that want to buy start to notice, oh, the price isn't moving lower anymore. That must mean there are other buyers coming into the market. So I better raise the price I'm willing to pay so the sellers will come to me because they're going to go to whoever is willing to pay the highest price. So, forget the news. Maybe there was some important news this day, maybe not. But if I wasn't looking at the news and I just was looking at the chart, I would say, oh, hey, we stopped going down at a level that was support. There's a good chance we're going to move higher.
And as a trader that's seen this pattern a few times, I'm giddy.
Well, it's because Wall Street seems like so mysterious, and like people don't really understand it. And they, people talk about hedge funds and market makers, and they don't really understand what it is. But if you could understand supply and demand, you could understand how to trade. What we're looking here is the supply and demand and psychology, right? The 3 stages of being a trader. Stage 1 is, oh, I want someone to tell me what to do. And then obviously sooner or later that blows up. Stage 2 is, I'm going to develop this system that's going to be great, or the strategy is going to be great. And for most people, that doesn't work because they never get to the 3rd stage. And the 3rd stage is the stage where you start to realize how important psychology is. So it's pretty fascinating stuff. And like I said, I've been looking at this stuff for 30 years, and it's still kind of, to this day, it still really kind of amazes me. So let's look at our financial sector here. Yeah, so financials they're getting pretty close too to what's probably going to be support. And let's look at consumer discretionary. Oh, look at that. So this is breaking below this level here. So I'm going to just kind of reduce this here. All right. Yeah. So I think we get some kind of a short-term balance, but I do think that we're going to go lower. And for those of you who don't trade options or futures, keep in mind that we got these inverse ETFs like SH, ProShares Short. I mean, look at that, right? So people are complaining, oh, I lost money. But, if you could have bought this just like buying an ETF, regular ETF. Well, it is a regular ETF. Now, I will refer you to the story of let's see, probably April or May of 22, when the market was blowing up and we had all this inflation going out of control. I was playing golf with my brother, and we got paired up with these 2 guys, and one of them was a securities attorney, and we started talking about the markets and what we all do. And I said, yeah, man, my students are really killing it. And the guy was like, how could they be doing well? Because the market's been going down. And I said, well, some of them buy inverse ETFs and that go up when the market goes down. And then a lot of them got into this ETF here, DVC, which tracks inflation. So this is back here. So a lot of the people from the Benzinga class got into this here and then sold out up here when the trend line was broken. And this is a good example here of just following the strategy. So we saw the trend line break, and it's like, all right, well, we got a good return. We followed our strategy. I'm not going to second guess myself that I should have sold it up at 30.50 because I don't care about being right. I just care about making money.
Nice job, Frank.
Cool. Yeah, that's always good to hear. So anyway, so this particular attorney was like didn't even know this stuff existed, and he was a securities attorney. So I guess that what I'm trying to say is that there's always ways to make money, and with these ETFs nowadays that they didn't even have when I first came up, you can get pretty much exposure to anything. And for those of you who are interested, I would say look at this. Not that I recommend these guys or anything like that, but they're pretty much my go-to for these inverse ETFs. And you can get inverse stuff on pretty much anything. I mean, sector equities, you think energy is going to go down? Well, you buy this ERY. This is going to go up twice as much as the energy sector. If you think energy is going to go up, you could buy this ERX. This is going to go up twice as much. So let me say that again. So if energy goes down, this will move inversely by 2 times the amount. If energy goes up, this will move up by 2 times the amount. You got your gold miners, FANG stocks. Let's see the FANG bull, FNGG. FNGG.
Ooh. Oh.
Huh. Something here does not look right. FANG bull. Because the FANG stocks have been going down, haven't they?
They've been getting beat up.
Let's see. FANG. Oh, I'm sorry. I'm looking at the FANG bull. I wanted to be looking at the FANG bear. So let's go look at the FANG bull. All right. It doesn't look like they have a FANG bear.
They probably took it off.
Well,
shut it down because the market's falling apart.
Yeah, I mean, a lot of it has to do with there's really complicated stuff goes on behind the scenes here with derivatives and options and so forth and so on. But for regular people, they can just trade it just like a normal ETF. They don't have to worry about things like that. All right, so now that China's falling apart, look at this. China bull. They don't have a China bear, but there is the yin and the yang.
The yin and the yang.
And I guess that's from a different family. Whoops.
Mark, what was that site name? Di's got a question.
Direxon?
Yeah, Direxon.
Direxon. So let me see here for what? Yin and Yang. Y-A-N-G. All right, so here's our China bear. So if China starts to completely fall apart, and it looks like it's going to, this thing here is going to move up or move in the inverse direction 3 times the amount. So if the China market goes down by 5%, this is going to be up by 15%. And we could see that we're making these big moves up here. So this, real estate is really kind of falling apart over there.
You bet, Di.
Oh, Brady.
Morning, Brandon.
And I would suspect that we're probably going to be seeing some more of it. So let's see. Investors fear China Lehman moment. Troubles at big trust company are making investors worried about financial contagion. Yeah. Well, I guess this is not a surprise. But this could have some follow through. We saw that the China just cut its interest rate, which is pretty much a sign of things are pretty bad. When people start cutting rates, the rest of the world is raising rates. Let's see what else we got going on here. U.S. allows F-16 deliveries to Ukraine. Wow. Now, this just shows you how this stuff. It's like they've been talking about this for a year. Why do they just keep putting it off and putting it off and putting it off?
News story.
This is another thing I think that we got to have on the radar screen to worry about, because this could go spinning all out of control at any given moment. And a lot of times wars are started by accident. Someone accidentally shoots down the wrong plane, or you get these rogue generals. Wow, 30 nations have U.S.-made F-16s. So they're made by Lockheed Martin. Let's take a look at that.
LMT.
Yeah. And look at that, we haven't looked at this chart in a few days. Look where it found support. Let me go rid of this line here. See, support back here, it becomes support here, resistance here. Now, why is there support around this level? Well, because it was resistance here. So we know why it was support here, but why did it become resistance here like that? We don't know. Why did all the sellers decide to come out at that place? We don't know, but we don't really need to know. Now, this looks like it could potentially go lower, because you notice how we got this lower high here?
Mm-hmm.
All right, everyone, I'm going to get going because I got to...
Well, then won't they have the inflation to deal with now if they go to replace the weapons that they've sold? I mean, you've got the rise of cost to be able to... Their value should go down with inflation, correct?
Yeah, but who knows what's going on behind the scenes and what kind of deals they're making.
That's true. True. Listen, guys, have a lovely day and be free.
And those of you who are in the Benzinga class, I'm not going to start until noon today because I got to go to I'm going to try to get to the eye doctor this morning because I'm pretty much out of contact lenses. But
Have a great
anyway,
day, guys.
so if you're out there, have a good weekend and we'll see you on Monday.